Good morning, everybody. It's Tuesday, June 29th. Going to run through the morning charts here. This morning we did get stopped out of our SP 500 trade. We saw the market just slide early this morning and just continue to move down, triggering our stop at 1062.75. And I'll cover that in a minute, but here's the price of gold. Yesterday we saw that extremely sharp, a quick three-wave sell-off going into noon, and it's traded pretty much flat for the rest of the day as everybody digests that sharp drop. This morning we're starting to see it form similar price action as it did the previous day, which is up here. We saw a little bit of this action. We could very easily see another leg down about the same size. We could see another $10 to $20 drop here. And let me just show you on the intraday chart what we're looking at. Yesterday we saw this really sharp drop, and what I like to look for is a three-wave correction on the 60-minute chart, and pretty much what we've seen here is just a more like a wave 1, 2, and another one would be somewhere down here around the 50 or 25 to $20 area. So if we see that next wave down, we might actually have an opportunity to go long. Depending on what happens, we might wait for a drift up into this level here, or possibly 30 level, and then actually take a short on gold. So that's what I'm seeing there. Pretty much gold's just kind of hanging right here, and it could go either way. It could just drop, or we could actually get a move up into the 45, 47 area, and then it roll over. But if we zoom out on this is a 60-minute chart. If we just zoom out a little farther here, you can see there's a possible head and shoulders, and we've got this neckline right across here, which gold is just sitting on right now. So if that neckline is broken, we're looking from around a 30. We're looking at $10, $20, $30 move, $35 move. So there is potential for quite a slide here, which would be 10, 20, 30. So we're looking at a pretty sharp sell-off potential. But of course, if this does a three-wave down, we might just see it drop down to this level, which will be a key support area, and then we could see it bounce up. Could have a good short, which will be right through all this noise here, and we might be able to catch a nice downdraft as it does a much larger time frame correction for the full head and shoulders reversal. So that's what I'm kind of seeing there. I don't think we'll be doing anything with gold today, but we'll have to just see how that unfolds. As for the SP 500, pretty much last week we just saw continued selling the market. Let me just pull it up here. Okay, so pretty much what we saw last week was we saw the breakout of this key resistance level, and we saw prices move up. So we've got a higher low. Now we've got a higher set of highs, and the whole setup here was we had a nice pullback into support into these tops, and we had a higher low, higher high, and we ended up going long somewhere right in here. We had a little bounce, and then we got stopped out for a 1.5 point loss, or a couple points at most. Anyways, it sold down. We ended up buying back here at this extreme oversold condition, and it couldn't post a good rally or a bounce. We're hoping for the trend really to continue up and to keep going, but that didn't happen. Instead, it broke down again. We had a nice bounce, and I sent an alert out to get out at break even or better, and so that position there was a wash. We ended up adding the next morning again because it was oversold once again. Again, it failed to start a new rally and continue higher, and we ended up adding again down in the 1072. And unfortunately, today it actually broke the Friday low, and we got out for a loss. So let me just show you. This morning it's sold down below this low here, and we're going to have to see what happens. It's sitting down now down near the May lows. This could be the final pop, the washout that gets everybody. It's a lot of times you see this kind of very solid run, and that's just enough to wash everybody out, and then it could reverse. So this morning, by looking at the market internals, we're going to see the advanced decline line probably down past the 2,000 mark. The market will be completely oversold again, be ripe for a bounce, really. Going to have to see what happens. The sentiment is so bearish. The news is coming out. Everybody's expecting bad earnings, or not very good earnings for individual companies, which is why I think we're seeing this move down into the earnings seasons. Everybody's anticipating companies aren't going to meet the estimates of their earnings. So we might actually see, when the earnings come out in a couple of weeks, we might actually see a rally or a move up, as people say, oh well, if the earnings aren't bad, if they're in line with the expectations, then we're probably going to see a rally on that news. But right now the market's discounting bad news already, so that if the companies do come out with inline estimates, we'll probably see a nice move up, because people are just freaked out right now about the economy and everything crashing. So it's just non-stop selling in the market. It's oversold. Again, it's extremely oversold this morning, but just the selling isn't ending. So we're gonna tippy-toe around here and see what the market does. Anyways, that's about it for this morning. We're seeing the US dollar make a move up this morning. Nothing huge, but it is drifting its way up. Crude oil looks to almost have topped there at around the $80 mark a couple days ago, and is possibly heading down, but it's down at a support level. US dollar is up at a short-term resistance level, so we might see a little bit of a bounce, but nothing big from the looks of it. Anyways, that's it for now, and I'll talk to you guys in the chat room. Bye bye.